And so when you kind of look at other parts of the crypto ecosystem, they're very speculation heavy. Even when you bring it back to the Bitcoin ecosystem, when you have things like fiat on-ramps and exchanges, there's still going to be somewhat speculation based, less so, some of it's saving, some of it's investing and speculating. But when you bring it all back to the Lightning Network, that's very, very utility focused. It's about payments, it's about infrastructure and things like that. And so I think that so far that the fact that it's been rather resilient is not that surprising. If you look back at, say, the 2008 crisis, for example, a lot of the companies that were growing that were later to become very big in the 2010s decade, a lot of them just kept growing from a small base through that difficult macro environment because it's the right product market fit. It's, people are buying things that are obviously better than what came before them. And I think we're seeing kind of similar things in some of the more utility focused aspects of the Bitcoin ecosystem, which certainly includes Lightning.
Bitcoin and the Lightning Network have been in the spotlight for quite some time now. The Lightning Network is a scaling solution for the Bitcoin network, which is designed to increase the speed and reduce the cost of transactions. In this video, Lyn Alden will be discussing the current macroeconomic environment and how it will impact startups, specifically Bitcoin companies. Lyn Alden explains that over the past 2 years, there has been a massive amount of stimulus and large monetary supply growth. This has led to a quick rise in consumer prices, and now the Federal Reserve is attempting to withdraw some of the fiscal stimulus. As a result, we are now seeing signs of economic deceleration and inflation coming off its high. However, some of the constraints for the supply side to trigger inflation are still present. Lyn Alden predicts that 2023 will be a harder year for fundraising for startups, but Bitcoin companies may benefit from the flight to safety and stability. Lightning companies, for example, have continued to grow despite the challenging macro environment and bear market in crypto and Bitcoin. Lyn Alden hopes that venture capitalists will recognize this and provide more funding for Bitcoin companies in comparison to their peers. Lyn Alden mentions that opportunities in the Lightning Network, such as the integration of stable coins, are approaching. Stable coins are a type of cryptocurrency that are pegged to the value of a fiat currency or other asset, like gold, in order to reduce volatility and increase stability. Lyn Alden suggests that companies within the Lightning Network, such as Lightning Labs, Voltage, and Ambu Technologies, have developed the tools that will enable enterprise to test the market with stable coins on the Lightning Network. She also mentions that the maturity of these tools means that users will no longer need to understand the technical workings of the Lightning Network in order to use it, and that the technology is beneficial regardless of the current state of the crypto and Bitcoin markets. As we dive into the nitty-gritty details of this development with Lyn Alden, make sure to like this video, subscribe, and drop any opinions or questions in the comment section.
So I think a narrative that we're seeing is that, during the whole kind of quote unquote Web3 thing that was happening, basically everything had a token associated with it. And basically that was just kind of like a lot of projects trying to get paid up front, whether or not the underlying project ends up delivering anything durable. Basically fast equity, ability to try to just have everybody do seniorage. And what we're kind of seeing lately is the idea that a decentralized web is a good thing. It's just that you don't need your own token attached to it. So we've seen, you mentioned Nostr. There's also the whole Keat/tags, that vector. Yes. There's Web5, right? There's multiple different kind of angles here. And, we'll see how some of them fit together or compete with each other over time. But the point is, it's just basically showing that when there's actually a good product market fit, the product sells itself. You don't need to add unnecessary gambling to it, try to get out of the position quicker. You're actually building something of value. And then the fact that there's this common money associated with it also allows for monetization in the normal way. Kind of like if you invent Uber app, you don't have to invent another one with its own money, right? Dollars are fine, or obviously, Lightning would be great, but basically you don't need to reinvent money every time you reinvent a new service. And I think we're seeing that play out in the kind of the Bitcoin focused, kind of decentralized web applications that have been gaining some momentum lately. Right. So for example, all of us on this call, we have access to dollars. It's not really a problem for us. We can just do our normal day-to-day activities with dollars, and then we can save and use Bitcoin in however way we want, and we're fine with the volatility. But a common thing that comes up when you look at these small communities that are building out around the world, these little Bitcoin communities, a common thing that comes up is, hey, we need dollars too. And, the ones that are doing it correctly, they acknowledge that their dollars are centralized. And the whole point is that the central hub is outside of their country. So for example, let's say you're in Argentina, I've seen it described as someone says, okay, I hold local currency for 1 month's worth of expenses. I hold, stable coins for several months worth of kind of intermediate term savings. And if I want to put savings away for years, I put it into something like Bitcoin. And from the perspective of, say, an Argentinian, they've had a history of, if you put dollars in the bank, they get confiscated. It's hard to get dollars. And so instead, what they do is say, okay, I'll hold dollars. They're centralized, but the central hub is outside of Argentina, right? So unless the United States goes after it, or unless there's fraud, there's counterparty risk, those are real risks to be concerned about. But the central hub is outside of that particular country. And so there is so far been a pretty strong demand for dollars by a number of people in emerging markets in these spaces. And basically the technology allows them to move around faster and in a more peer-to-peer way. And so far they've kind of shifted around to different blockchains. So obviously they started on top of Bitcoin. A lot of them migrated over to Ethereum. That's mostly used for trading, right? Because it's higher fees, bigger amounts. Whereas a lot of the spending dollars moved over to Tron. And basically a lot of these spaces say, okay, I want to have stable coins, but I don't really want like another token associated with it. I don't, if I'm using a centralized stable coin, I don't need a whole another centralized layer to deal with. And there are different alternatives for how to do that. There's the Taro proposal, which is basically the idea of running them over, using the edge liquidity of the Lightning Network to run them over. There's also, proposals like Pure Credit, which is basically using like a Lightning-like ledger that's not actually on Lightning to move around those dollars. And we'll see what kind of market things end up winning. But I think it's clear that there is a demand out there for dollars, at least as an intermediate term thing, because, not everybody can deal with, 70, 80% drawdowns on 100% of the money that they're using.
A truly decentralized and permissionless payment network requires its own underlying self-custodial digital bearer asset. If instead it runs on top of the fiat currency system or relies on external custodial arrangements at its foundation, then it is neither decentralized nor permissionless. In order to create a truly new digital bearer asset that is useful for payments in the long run, it must also be an attractive store of value, so that a meaningful percentage of the population begins to persistently hold it as some percentage of their liquid net worth and be willing to accept it for goods and services. In other words, in order to create a decentralized version of Visa, beneath that you must first create a decentralized version of Fedwire, and along with that you must first create a decentralized version of digital gold. It's hard to envision any other path succeeding. Bitcoin started with a smart design from the beginning. It created an underlying digital gold and settlement network with a credible degree of decentralization, auditability, scarcity, and immutability that no other network currently rivals. On top of that foundation, Lightning as a payment network is being developed and has reached a critical mass of liquidity and usability. Many cryptocurrencies that followed in Bitcoin's wake put the cart before the horse. They optimized for throughput and speed on their base layer at the cost of weaker decentralization, auditability, scarcity, and or immutability of the underlying bearer asset. As such, they failed to gain structural adoption as money and rendered their high throughput irrelevant, especially since they were brought into existence in the shadow of Bitcoin's larger network effect. Are you bullish on Bitcoin's Lightning Network? Let us know your opinions in the comment section below. Also endeavor to hit that like button, subscribe, and turn on notifications. Thanks for watching.